Big changes are coming to the UK tax system, and if you're self-employed, a landlord, or running a business, listen up. The government is shaking things up with the new rules for reporting taxes. Today I break it all down for you, what's changing, why it matters, and most importantly, how you can prepare. Let's get into it. So what's happening? Two big updates are heading your way. Number 1, P11D, benefits in kind reporting, is going fully digital and integrated into payroll by April 2026, so that's not that long away. Number 2, MTD ITSA, for self-employed individuals and landlords earning over £50,000, quarterly tax submissions will also become mandatory from April 2026 under the Making Tax Digital for Income Tax Self-Assessment, or MTD ITSA for short. It's a bit of a mouthful, isn't it? Why are these changes happening? It's all about modernising the system, making it more efficient and reducing errors. But as with anything new, it means more planning and some new habits to get into. Let's start with P11Ds. These are used to report benefits in kind, like private medical insurance, company cars, or interest-free loans. Right now, businesses report these once a year, but from April 2026, everything changes. Benefits in kind will need to be reported monthly as part of your payroll process. For example, let's say you provide private medical insurance worth £600 a year. Instead of an annual report, £50 will be added to the employee's payslip every month and taxed in real time. At the end of the year, employees will get a summary document similar to, say, a P60 showing the total benefits they received. Sounds simpler, right? But here's the catch. You must register with HMRC before the 5th of April each year to payroll these benefits. Miss the deadline and you're stuck with the old system for another year, so timing is everything. On to MTD ITSA. This is the big one for sole traders and landlords. From April 2026, if you're earning over £50,000 annually, you'll need to submit your tax information to HMRC 4 times a year. For those earning over £30,000, the rule kicks in a year later in April 2027. What does it look like in practice? You'll be submitted unadjusted income and expense summaries every quarter using HMRC approved software. Then, at the end of the tax year, you'll file a final statement making any necessary adjustments. This might sound like more admin, but it's actually an opportunity to keep on top of your finances year-round. No more last-minute scrambles before the January deadline, but it also means you need to be organised and have the right tools in place. Alright, let's talk tax prep. These changes aren't just about new rules, they're about adopting new habits. If you're still using spreadsheets or paper records, now is the time to upgrade. Look into software that's compatible with HMRC requirements and automates as much as possible. Understand registration deadlines. For payroll integration, make sure you register for payrolling benefits with HMRC by the 5th of April each year. Don't miss this deadline, it's a hard stop. Communicate clearly. If you're an employer, let your team know about these changes and how they impact their payslips. If you're self-employed, consider talking to an accountant about what quarterly submissions will mean for you. Plan for regular updates. Quarterly reporting means you'll be engaging with your finances more often. Block out time in your schedule to stay on top of this. It's all about building good habits. Technology is going to be your best mate in this transition. HMRC's push for making tax digital is all about using software to simplify tax reporting. If you've already switched to digital tools for VAT reporting, you are ahead of the curve. Well done. Many providers now offer solutions that handle VAT and ITSA in one place. so look for something that works seamlessly with your business setup. For employers, updating your payroll systems to handle real-time benefits in kind is essential. Don't wait until the last minute. Start testing now to avoid any hiccups. These updates might feel overwhelming, but they're designed to make tax reporting more efficient and reduce errors. Yes, there is a learning curve, but with the right prep, you can use these changes to your advantage. By staying on top of your finances throughout the year, you'll not only meet your tax obligations, you'll gain a better insight into your business performance. Think of it as turning a challenge into an opportunity. So there you have it, big changes, but nothing you can't handle with the right preparation. Remember, update your software and systems. Stay organised and start early to avoid unnecessary stress. Got questions? Drop them into the comments and let's get the conversation going. If you found this video helpful, give it a like, share it with your network and subscribe for more tips to make your business thrive. See you next time.